Good morning, everyone. It is December 15th, Wednesday, December 15th, and this is Morning Market Movers, where we do live analysis for day trading. I'm Todd Rich with Nadex. With me is Brian Caprice from Keep Trading Simple. What are we going to be talking about today? Well, obviously it's Fed Day, FOMC Day. We're waiting 2 p.m. today. The Fed is going to release their statement on interest rate decisions, as well as some color commentary around any policy changes around reducing, tapering bond purchases, and maybe an indication on when they're looking to raise interest rates next year. That they'll have a press conference at 2:30 Eastern. So this is what today is all about. And right now, it's been a bit of a muted morning going into the FOMC decision. We have seen retail sales numbers just came in at the U.S., complicating things a little bit. We're expecting them to come in at higher 0.8%, and they only came in higher 0.3%. So the retail customer is not spending like we would have hoped going into the holiday season. That is actually interesting, particularly when we had those high CPI numbers. We know inflation's here. Well, now is it starting to impact buying behavior already? And now are we going to have a different story? Oh my God, people aren't buying stuff. Let's stimulate the economy at the same time. Everyone's complaining about inflation and we need to slow it down. So it's complicated. It's complicated. So we are going to be looking at some of the FX pairs. Inflation in Britain. We're going to take a look at what's going on. People preparing for the U.S. The dollar going into the FOMC decision. Energy is moving a little bit. Got oil down below $70 a barrel, and equities. It's been a bit of a snooze fest. While they're slightly in the red at the moment, we're waiting to see what's going to happen with the retail sales impact and then the FOMC later today. Before Brian and I jump into it, I do need to quickly share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. You know what, Brian? I'm just going to flip it over to you. Let's take a look at the FX quickly. We can take a peek at the
Sure.
energies. Then you can see crude oil's down, and
Mhm.
I don't know if there's anything we really need to be looking at with equities at a total just nothing at the moment. So let's jump into it.
Yeah, I mean, this morning we knew that the CPI was going to be a big. I don't know, I was trying to get the API numbers up. We knew that that was going to be a big number. That it was expected to be a 4.8, came in at 5.1, and we saw the initial surge at this point. It's already happened, so there's, we mentioned yesterday, you got to kind of get in before the news, and depending on what pair you're looking at. I mean, obviously the dollar is really hitting major strength across the board in preparation for FOMC today. The pound, even versus the dollar, is up 19 pips from where we were yesterday. Euro pound, again, 46 is larger than an ATR. That has obviously been grinding down because, again, with the expectation of that, it's starting to retrace now. You can see in the last hour the profit taking is coming in. Pound yen, same thing, up 73 pips. Not a full ATR, but again, at the same time, some of that is also weighed from the yen. All of those trades are pretty much the same. Where news popped in, we talked about, being able to get long from any of those using shorter duration contracts. And you can see even here where the news came out at 2 o'clock, here's the 2 o'clock, and we go across to the 4 o'clock right there. You're talking about a 48 pip move in such a very tiny, minor time frame. So again, that's kind of what we expected. Not much we can do with it now. Pound dollar is kind of the same thing, but the pound dollar and the pound yen are both giving us interesting kind of setups right now. They both already started to retrace. Obviously, today with FOMC, everybody's expecting the dollar to come in strong. Again, talking about the tapering schedule, talking about when they're actually going to start raising interest rates, what that actually looks like. We'll see if Powell finally takes much more of a hawkish tone with it. Where we are right now, again, we've had the pound numbers come in. Now we're waiting for the dollar numbers to come in. So retail sales obviously did not help, but I would say that there's probably some reversals. And again, you can see here already as of 3:30 in the morning, an hour after, we're already starting to roll back over in the pound dollar. So, I think the interesting thing to look at, and you can see euro pound, it's lower, but again, started to chop around. So pound news is done. The U.S. number, and again, the dollar number is going to be kind of what rolls in next. The core retail sales numbers on face value, when you look at them, they're red. They missed the forecast by about, it's about 30% of what the forecast is supposed to be. Still positive, much lower. And again, it's not listed here, but when you click in the article, there was actually a revision higher last month. So with a higher revision before, it's not unexpected that it's going to be a little bit lower. It shows the fourth month in a row of, higher retail sales. You kind of expect it at this time of year. So in reality, it's red, but it's not as red as what you might have assumed. At face value, you think super negative, but again, still positive, fourth month in a row, and there was a vision of the other one last time. So this surging higher than it was obviously helps. The Empire State Manufacturing is kind of a hidden number, and it's something they're not going to talk about. The 31.9, obviously much higher than expected, higher than before. Seeing the manufacturing index kind of kicking it up kind of shows you what they're preparing for. So that's always kind of good data to see. But right now, again, it's going to be kind of this negative tone looking for this morning. And again, that's going to kind of control the indices. But the big news is going to be the FOMC economic projections. Again, retail sales will weigh on that. But again, yesterday's PPI number being as high as it is, now it's kind of like, wait a second, the sales aren't as high as they were, but inflation is getting worse and worse and worse. And again, think about it. We all know there's supply chain issues. If you're not selling as much, how do you make the same profit? You got to sell it for a higher price, and that kind of how it works out. So that's what we're seeing. But at the same time, when we start to crush this, question is, what does it do over here when everybody starts seeing lots of red in the market? So very interesting piece today. So yesterday we mentioned, at least in the, again, well, here's the pound. Things that I would say watch out for. The dollar is holding very, very high. Okay. Typically, when we see things move up like this, the market will price things in. And there's no surprise what the Fed's really going to talk about today. But with it pricing in, all the dollar pairs right now are very, very high, minus the pound dollar. So that's what I'm saying. I'd be looking for a reversal here. All the dollar strength is already starting to flood in, which makes this kind of interesting because they're all in the same thing. The Aussie, huge spikes up, little Harry Potter higher, right? You see the pound, again, already starting to reverse a little bit. The Euro's kind of holding firm. And again, we had this kind of Harry Potter short here. This doesn't have the same type of strength. The pound's in there. CAD continuing to roll higher. Swiss continuing to grind higher. Yen already starting to take off. The dollar yen already starting to take off. So this is a lot of dollar strength really, really early, especially with such a red number coming in, because this should technically not be good. So I'm wondering, yesterday I told you guys, look for buying opportunities. And at the open, everything kind of spiked up, right? I would say, if we continue with the dollar weakness up until 2 o'clock today, I feel like it's already priced in, and everybody that waits to hear what everybody knows is going to happen may be late to the party. So, we said that we were definitely, bullish dollar on this one, but I would say right now, the way that it's setting up, this may be completely wrong, but all this dollar strength coming in, the market may price everything in, and right now with the equity sitting at basically all negative, ES is flat. VIX is not great, but it's not spiking either now that we had bad numbers. And again, there'll be some anticipation for FOMC, but with everything a little bit red right now, right? And again, if we start to push down a little bit, a weak dollar will, a strong FOMC statement should turn all the markets down and should send the dollar up. Right now, we're seeing the dollar up. So if they have a weaker statement,
they're getting in front of the trade. Everyone knows what they're going to say. They're getting in front of the trade, and is it their opportunity for everyone else to, the Fed's now confirmed it.
Yeah.
Watch a spike, and people then rush in to buy, and all those people who bought earlier in the day, they're just going to take their profits and dump it on them.
Yeah, and we got 5 hours to go, so we'll see. But it's kind of, the way that it's setting up right now, it almost looks like we're going to be red until the FOMC statement in the equities, and then maybe an upward bounce. And same thing, dollar will be straight up, and then it seems, because it's being priced in, and now it almost seems like we could have an opportunity to be selling the dollar before the news. Again, how you guys play it today? Go to a short duration contract. Probably go look at the 1 to 3s. Unfortunately, try to use a 2 to 4. The problem is, by the time you get the contract in, the market may have already moved on you. So you're going to have to use those shorter durations, or maybe because even if it's at the end of the day, you may actually be able to use some of the daily contracts in there. Because again, remember, currencies end earlier. They end slightly earlier than the equities. So yeah, a lot in there. And again, Don't forget today as well, oil.
And then yeah,
Um,
let's finish it up with oil, because oil is
yeah,
trading lower going into FOMC, and then we do
yeah,
have the oil inventory report before that's at 10 a.m. this morning. So let's do
yeah.
let's wrap up taking a look at oil.
Yeah, I mean, surplus came in less than expected. It was expected to be minus 2.6, and it came in at 0.8. So not necessarily as bad. I don't see. Let's see. It's over here. It would be at 10:30. Yeah, they're saying 1.8. So again, if it comes in line with the industry, the industry totals, again, this could also be another red, basically a red number for oil. Oil isn't doing much. I mean, it opened. Let's see, it opened right here and kind of drove down and is driving back up. So really, the European session is more or less wiped out as far as what oil looks like. Which again, we get a little bit of red numbers. There could be something in here, especially with retail sales lower and again with them trying to crush it down. I mean, there may be a shorting opportunity, but right now it is above 70, but I'm going to tell you right now, this is going to be one of those things that goes back and forth. If it's above 70, they're going to talk about it. If it goes to below 70, they're going to talk
They're gonna
about it
talk.
because it just,
Oh my
it,
God, it's above $70
yeah,
a barrel.
we're
Oh
below,
my
yeah, we're
God, it's
below
below
70 right
seventy
now.
dollars a barrel.
Yeah, yeah, yeah. And in reality, I mean, it is going to be mentioned at the FOMC statement because again, we've seen the most inflation over in the energies over there, so
You
it
bet.
is going to be talked about. But remember, it is a supply and demand, driven tool, and OPEC Plus is really controlling this back again. So I think the biggest thing is going to be is what does taper look like? What type of support are they going to put in? And again, really, I think a lot of it goes back to how fast are they going to start raising interest rates, and is it going to be a double the first time? So
Right.
um,
If
it's
they
going to be
even
an
give us
interesting
a peek
statement.
on that, right? They might just tell
Yeah.
us, all right, they've been spending 100 billion a month on bond purchases. We're going to be
Mm,
tapering it off and only buying X amount. I know that. I mean, then the other question is their balance sheet. I mean, they've got
mm.
this massive multi-trillion-dollar balance sheet.
Yeah, but that doesn't matter.
Well, right. Well,
Congress will just
some
give us
people are
another
wondering if they're
five
going to
trillion on
puke
there.
that. The
Yeah.
Fed will never they won't sell those assets. I mean, they're buying
Mm,
bonds. What they'll do is and this is what they've done in the past, they simply hold them until maturity, let them fall off, and then they stop using the coupons to repurchase more
mhm.
assets. So they'll just hang on to them and let them fall off over
Yeah.
their due course.
Yep.
In which case they're never out there pounding the bond market by actually selling the
Yeah.
stuff
Yeah.
back out.
Yep. And that's a great point. I mean, and bond market also, we drew kind of a level yesterday with that gap. Bond market is also starting to pull back again, which is another one of those things when you're seeing the bond market pull back, it's kind of like, when bonds go down again, we tend to see, indices go up. And at the same time, again, the cryptos out there, they're all down too. I mean, Doji's down 7% today. So it's one of those scenarios where it's like, well, dollar's rising, indices are all red, cryptos are all red, gold is kind of flat. It's in the red right now.
It's done
Where the
great.
heck is all the money going? And it shows you that the money's not going anywhere. Nobody knows where the money's going right now because, again, seeing it, they're all positioning for this FOMC. So it just shows how important
Something's
that
gonna
number is today.
happen. We're just all sitting on with bated
Yeah,
breath.
yeah, exactly. Yep. Natural gas is the only thing moving. So obviously, all the money's going to natural gas. It's up
Yeah.
3.2% this morning. That's it. Yeah, there it is, guys. There's the secret today. Yeah, I mean, Apple, nothing. Yeah, Tesla, nothing.
Right. Everyone
Um,
hit the snooze button today until so we'll
yeah,
see what the Fed has to say and what
yeah,
they ultimately come out with. All right.
yeah.
Uh, with that, any questions for Nadex, please email us customer service at nadex.com. Any questions for Brian, please email Brian at support@keeptradingsimple.com. We will be back tomorrow morning and try to sort through some of this. And once we get a chance to see what happens, digest it and look for opportunities later this week. But I would imagine there's going to be some volatility this week. And, even through the end of the year, as people start taking time off, I would expect to see continued volatility as people do step away, and with reduced liquidity, there'll be pockets in the market where things do move around.
Yep.
As for today, it is a bit of a snooze fest on equities at the moment. Everyone's sort of waiting to see. I think equities are slightly in the red at the moment, and we're just waiting to see what the Fed's going to say. Again, 2 p.m. Eastern is when they drop the release. 2:30 is the press conference.
Mhm.
Retail sales were kind of weak. They were still higher, 0.3% higher, but we were looking at 0.8%, and we are heading into the holiday season. Maybe everyone's already done all their holiday shopping, knowing inflation is getting worse. I don't know if
Not me.
everyone. Maybe.
Not me.
In which case,
The final prime date's
stores
not
will
here
have to
yet.
put everything on sale.
Yeah, that's how men shop at Christmas. It's not A or B. It's whatever's left.
What, what, yeah, what are your choices? I have choices.
It's
Oh
whatever's
well,
left. Honey,
someone
I put a
left
lot
this
of
on the
thought into
floor.
this one.
I'll
Yeah,
take it.
sounds good.
All right. I love it. Too funny. With that, Brian and I will catch you again tomorrow morning. Thank you for joining, and good luck in the markets.